Now let's delve into the transformative potential of open network for digital commerce in revolutionizing India's digital commerce ecosystem. We will provide a comprehensive overview of the ONDC model, exploring its key features, benefit and implications for businesses and consumers across the nation. Gain valuable insights into how ONDC is poised to empower small and medium enterprises and promote inclusive growth in Bharat's digital economy. Ladies and gentlemen, kindly join us for a captivating speaker session titled The ONDC Model Shaping Bharat's Digital Commerce Landscape. Presenting to you our speaker, Mr. Hrushikesh Mehta, Senior Vice President, Financial Services, ONDC. Let's have a huge round of applause for him, please.
Hi, good evening, everyone. I think we're the last session, so we'll try to make it entertaining. But look, I know that we've been a lot in the press, so let me try to explain what we're doing both on e-commerce and how we're overlaying fintech on top of that, because I know that's the interest of this group and this whole conference. So look, if I had to describe ONDC in 2 sentences, it's markets for sellers and choice for buyers, right? And we do that through standard protocols. Now we've had the help of the Aadhaar journey, the UPI journey. For those who are familiar, I think most of you will be with the account aggregator journey and the standardized protocols to transfer data. And finally, you needed something to stitch all of it together, both on the e-commerce and fintech side, to make this all possible. So even before we dive in, right, and I think everyone, if you, I have a long presentation, but I'm not going to go through the whole thing because I'll talk maybe 20 minutes theory and then we'll hear from some of the participants who are actually operating on ONDC. So what are we, right? We're a disaggregated or unbundled marketplace. The platform world as it exists today, whether it's e-commerce or it's even with financial companies, is you have, sellers are onboarded, then you do some advertising, bring on buyers, and then that's how the wagon wheel starts going around. But typically what happens in that case is there's 1 or 2 dominant players emerge. That gives them, it's called a monopsony, it gives them disproportionate power. And what happens is value is extracted from the sellers, and that's very, you can see that very clearly from the commissions of 30% that are extracted from some of the larger marketplaces. It's also then advertising to show right up top as the first choices so that your product gets sold. And then what happens is as they learn what's selling, they tend to backward integrate and then crowd out the smaller players. So what is our design, at least on the e-commerce side? So I think these standardized rails where we sort of disaggregate the marketplace, where separate apps onboard sellers, separate apps onboard buyers, but then you're broadcasting to everyone in the network. It plays different roles in e-commerce and I think different roles in finance, and I'll cover both of those. So in e-commerce, what it does is gives everyone a level playing field, right? What happens is if I come to a seller app and I onboard my inventory, and I go to a PhonePe, a PIN code or a Paytm and search for, say, pizza, it gets broadcast to everybody without exception who can service that PIN code. So the front-end app has to only focus on the user experience and the buyer journey. The seller apps focus on bringing on the inventory, whether it's pizza, pani puri, whatever you want to order in terms of food, fashion, even mobility is live, as some of you probably know. So you can actually choose to be any company you want to be on the front end, right? And what this does is, the idea is it shouldn't be only the large players that list. Can you also get smaller players, the mom and pop shops, to go on the digital journey and create access to market? So it comes back to the original principle. Can I provide access to sellers, access to markets, and can I provide choice to buyers, right? So they're not constrained by choices that pay the marketplace the most to show their product. Now, the other thing we do is also, look, we're not supposed to get into what commissions are made by the buyer and seller apps, but we've asked for guidance. So it's settled somewhere between 3 and 5%, both for the buyer and seller app. And what that means is, like I talked earlier about the 30 to 50% that gets extracted from the sellers, that value now is free to be redistributed amongst the buyer. So do they get a discount? The buyer app, do they make more money? the seller, does that go somewhere into their pocket or does it go into the seller app's pocket? So the idea is, can you reduce prices, improve discovery, provide more choice? So we've just gotten started, and when I say just gotten started, we've been around for, I think, 15 months operationally, around 2 years since the company was incorporated. We're live with mobility, food, groceries, fashion, B2B. We're even exploring exports, and new categories are being added over time. So it's been good, it's been difficult at the same time. So for example, I'll give you an anecdotal experience of my own. When I came to ONDC last year, I tried to order food, but I didn't see the little scooter guy, tracking his way to delivery. Now that's there. So look, there's a lot of pressure, and as you know, we're in the media almost every 2 weeks about something launching. But the yardstick we judge ourselves by is what we look like from 5 years from now. We've been around for 1 year. Nobody would judge any other company in 1 year. We do get judged, and no apology for that. But it's going to take time. You're trying to drive a quantum shift. You're trying to onboard from Kanjivaram saris in the south to ladies who supply masalas in Satara, to give them an opportunity to be able to sell beyond the cities they serve, beyond the localities they serve, and also provide logistics service, which is also unbundled. So it's begun to work. We've seen the green shoots. I think we have now about 5 million transactions a month, up from like a few thousands when we just started. Yes, obviously the growth will be faster early on, but then, the challenge is not only, and there's this other myth, right? That we are here to kill Swiggy and we are here to kill Zomato. And look, that's not the idea. The idea is, can you widen the market for everybody? Can we go onboard inventory where they would have found difficult to onboard? So, and that means engaging NGOs, partnering with state governments. So you widen the inventory base so that everyone benefits from this. So that is our take, regardless of what is put in the media and projected out there where we are out to kill big tech. That's not the idea. You're out there to deepen the market for everyone. Now, the other thing standardized rails do is it gives everyone an equal opportunity to participate. They're not only two players. You don't have to adhere to only the policies of two companies. There are multiple companies out there, and whether you're five guys with a laptop starting up or whether you're Amazon, you're both welcome to participate. So that's the basic philosophy on e-commerce. Now, in the interest of time, I'm going to spend a little more time on the fintech side and how we think about it there. So look, commerce in itself is to make money, but obviously you need financial products to do this as well. Now, for those of you who don't know, and I'm going to address another question, is the whole OCAN versus ONDC, that I'm sure I would have got the question anyway, but I'll answer that towards the end and very candidly, so apologies in advance for that. But so here's the thing, right? We developed a credit protocol on standards like that both lenders and marketplaces could adopt. The idea was, can you deliver sachet credit to whichever remote corner of India without having to be present and without needing paperwork? That was the original mandate. And if you think about it, we extended it to insurance and investments because those are all underpenetrated. Now, if you think about it, credit is required to generate income. So the MSME buys with cash, sells on credit, and is always cash strapped. In their local areas, they'll go and borrow as high as 6% a day, and just the same running on the wagon wheel and not really getting anywhere. So the other 5 pillars in the way we think about fintech at ONDC, right? One is access. Can I create standardized rails connecting manufacturers to any digital distributor or phygital distributor? And what that means is it doesn't have to be self-service. You can even have a banking correspondent, or you can have, Spice Money, you'll be hearing from them later, or the Pay Nearby type of companies who can actually guide customers on how to use this, because there's some education needed as well. So the first step is connectivity. Can we create the standardized rails to connect all the manufacturers to any digital distribution point in the country? This learning actually came from how do you drive access, right? So you provide connectivity, provides access. Now, access is not the only thing. We can't provide access to a 50 lakh loan which a villager can't take, right? So the next thing is affordability. How do you drive down the costs of delivery so that it becomes sachet sizes? And What does that mean, right? Like, can I do a 500 rupee loan, a daily loan? Can an auto driver, who rents an auto for 350 bucks and spends 3,000 bucks on an LNG tank, borrow that amount in the morning, drive that thing around, and pay that, money back in the evening with some money that he's made? So no capital, can I start making myself money? So the first thing is credit to drive income generation. Now, sachetization of this requires us, and when I say us, like we are the connectivity, the APIs that stitch all the public goods together to deliver this, right? Whether it's account aggregator, DigiLocker, eNACH, eSign, AutoPay, whatever it is, right? The issue is, can we bring the costs of usage of this stuff down? So we are working with NPCI, we will work with Aadhaar, we'll work with SEBI on some of the other costs that even the mutual fund industries are struggling with to bring down this cost, because every % we bring down the cost, that is the size of the ticket size that can come down. So if I need to do a 100 rupee mutual fund, if I need to do a daily insurance of 3 rupees or 5 rupees, if I need to do a 500 rupee loan, the costs of delivery have to come down, or these will never be profitable, and hence the manufacturers will never offer them. So affordability. The next is commercial model, right? Now, if you have this disaggregated marketplace where the buyer app needs to make something when they distribute the product, there has to be a commercial model. So, the manufacturers make margin on their product. The distributor needs to make some money because there has to be incentive to convince someone to buy a product. Now, loans are a demand-driven product, so it's not so much of an issue. But look, everyone says insurance and investments are more like a push product, like people have to be convinced and they have to understand. That is also an access issue. Like anyone in this room, none of these three products are push products, because you will seek out health insurance, you will seek out mutual funds when you have surpluses to invest, but these are not even available to those guys. So you need a commercial model, so the distributors are incentivized to educate these people about selling these products. So why do I say this? Because we've had a fair amount of push that why don't you enable execution only or direct mutual funds? Because when the funding boom was there, everyone was happy to do that to just pump up their user base. But when now the funding has dried up a little bit, now everyone's like, how do we make money? So we've chosen to go the distributor model for mutual funds, and in insurance, there's a commission structure already there. And lending, I mean, it's also there that the lender pays the buyer app. Now the final pillar, so you have connectivity, you have access, you have affordability, you have commercial model, is regulations and policy, right? Now, look, regulations, like we've got the best, I think the best regulators, personal opinion, notwithstanding all the turmoil that's been going on in the last few weeks and months. But there's a lot of receptivity to suggestions on how to change playground rules to reach the bottom of the pyramid, especially MSMEs, especially that missing middle, right? They don't have a GST, they don't have Udyog Aadhaar, they don't have Udyam Aadhaar, they run the small shops, they have no presence other than a digital presence. Because of UPI and the 300 million people that have come in. But the question is, what can we do to enable them? So we're working, to do a sovereign credit guarantee for new to credit customers. We're trying to do an interest subvention, anything to help where at least the flow of the products start to this space. And there are also other things that need to be remedied, right? Whether it's, like I said, the cost, the affordability of certain public goods, or whether it's even like some KYC norms, or what can we do given all the digital tools that we have now to smooth the delivery of products to this space. Now, I have about 2 minutes left, and I'm not going to talk about, I'll let you hear from the guys now who are actually live on the network for the financial products, but we are live. So we have released credit, insurance, and mutual fund protocols. We are live with credit. We have EasyPay, who's going to be on the panel, Nilay from EasyPay, who will talk about his experience. We are going to be live with insurance by the end of the month, and we're going to be live with investments by April. All the protocols are out there, and whoever wants to participate, we've got at least a dozen companies on both sides of the buyer-seller side on each of the cohorts. So I think by the next year, this time, we'll come back with data of what the experience has been. So it's been we're pretty optimistic that the first year was laying the infrastructure. This coming year will be piloting and just optimizing. We function like any other fintech. You ship a product, you optimize it, and I think the year after, we'll try to push for scale. Now I have 1 minute left, and I'm going to address the ONDC credit on UPI and what the differences are. Look, I did OCEN. I'm doing ONDC. The flows are pretty much the same. The public goods are pretty much the same. OCEN is a volunteer-driven initiative, right? The APIs are great. I mean, I helped put them together. We did the Gem Sahay implementation. It worked like a dream. In fact, what we built there was like the homebrew club. We got to tinker. We got to, in a relatively risk-free environment, build something to deliver credit in 7 to 8 minutes. ONDC is the institutional version. You get support. There's continuity. You see, if you write to any of us, you'll get a response very quickly. We'll collaborate with you guys and build more use cases going forward in the future. Everyone will ask, oh, which one do I do? I've made my choice quite clearly. You're welcome to make yours. There's no compulsion to use one or the other. It's a public good. We're not competing. India's large enough to work. I mean, we've not addressed the market. No one silver bullet is going to fix all this. So you're welcome to choose what you want. Actually, in the hallway, we were having a conversation about credit on UPI, and are you all competing with the ONDC? And I'm like, absolutely not. In fact, we are in discussion with NPCI as what we can do together to further the movement of credit. And look, the difference in digital public goods is we don't compete. Our mission is the same. Like, for example, if NPCI is wildly successful in getting credit or other financial products to the market, I'm happy to wind up and go do something else. But I don't think it's going to be quite that simple. Our country is complex, it's diverse, and it's vast. And the more people who are helping to do this, I think the better it will be. So I'll stop there. My time's up. I think it's time for the panel.
Thank you, Mr. Mehta.